Islamic structured product and derivatives are financial instruments designed to comply with Sharia law, avoiding interest, which is riba, and ensuring transactions are backed by the tangible asset or service. These products aim to offer return while respecting Islamic finance principle by using contract like muraba, which is cost plus financing, ijra, which is leasing, and sukuk, which is Islamic bond. In the Islamic context, derivatives are tailored to meet Sharia compliance by focusing on risk sharing instead of speculating, meaning they are based on the underlying asset and avoiding existing uncertainty, which is qarar. This growing segment appeal to investors seeking ethical investment aligned with their religion belief.
My name is Kahwiling A21, A2483. In Islamic finance, certain transactions are not acceptable in Islamic because they are prohibited in Islamic teaching, which are transactions that involve interest, uncertainty, and gambling. First, Islamic finance strictly prohibited interest, which also known as riba. Riba refers to the practice of charging interest where money is earned from money itself without any productive activity. For example, unlike conventional bonds, they pay interest. Islamic bonds represent ownership in a tangible asset or investment, providing returns based on the asset performance. Next is prohibition of uncertainty, which also known as goro. Goro involves uncertainty where there is a lack of clarity about the terms, subject matter, or the price in a contract. All Islamic transaction must be transparency, clear disclosed term in the contract. For example, murabaha contract, the seller clearly disclose the cost and profit margin to the buyer before the transaction. Third is gambling, which also known as myself. Myself refers to acquiring wealth by chance, betting games, or engaging in speculative activities. It is prohibited because it encourages taking high risk without a productive economic purpose, leading to potential losses and injustice.
Assalamualaikum and hi, I'm AISYAH AZZARA binti Jalani with numbers A21, A2379. So here I would like to explain a few types of Islamic structured products and derivatives. Firstly, the Murabahah-based structured product. In the Murabahah contract, a financial buys an asset and sells it to the client at a markup that includes the asset cost as well as an agreed upon profit. Secondly, Mudarabah-based structured product. Mudarabah is a type of partnership in which one of the partner gives funds and the other provides skills. Thirdly, Wakalah-based structured product. An investor can appoint an agent to invest on their behalf. The agent handles the funds and charges for fee service if earnings dispersed according to the predetermined ratio. Next is Istithnat-based structured product. Istithnat is a sale contract for items to be made or constructed, commonly used for project financing. Furthermore, Ijarah-based structured products. Ijarah leases an asset for a predetermined duration in exchange for rental payment. It can be made as a sale and lease back or function as a capital preservation tools. That's all from me. We move to the next presenter.
6. Salam-based structure product. Salam literally means to giving payment in advance and leaving. 7. Tawaruk-based structure product. Tawaruk means selling something on deferred basis and then buying it back in cash, albeit at a lower price than the deferred price. 8. Arbon-based options. In Arbon transaction, a buyer makes a down payment toward the purchase of an asset at a specific price, step price, within a specific time period, access period. 9. Sukuk-based structure product. Sukuk, Islamic bond of Shariah compliant bonds, is an Islamic financial certificate that represents a portion of ownership in a portfolio of eligible existing or future assets. 10. Islamic cross-currency swaps. According of Islamic law, al-wa'az means a promise which connotes an expression of willingness of a person or a group of person on particular subject matter. And lastly, structured investment accounts. Structured investments are usually fixed term debt obligation of certificate of deposit as potential return or potential loss are determined by the performance of one or more underlying assets and are subject to the credit risk of the issue and the guarantor.
Good day everyone, my name is Paul Ying, number entry A21A3034. I present the path of the proof of investment in Islamic structured product and derivatives. First, Sharia compliance. Islamic structured products are designed to comply with the principle of Islamic finance, which prohibit interest, uncertainty, gambling, and financing forbidden activities. This makes them suitable for investors who want to align their investment with their religious beliefs. Second, profit and loss sharing. Islamic structured product often incorporate profit and loss sharing mechanism, which means that investors share in the profit and loss of the underlying assets. This can result in a more equitable distribution of returns compared to traditional fixed income instruments. Third, risk management. Islamic structured products often include risk management features such as profit guarantees and capital protection mechanisms. This feature can help investors manage and mitigate risk associated with their investments. Last but not least, growing demand and market potential. With rising global interest in Islamic finance, there is growing demand for Sharia-compliant investment products, including structured products and derivatives. This demand creates opportunity for growth, innovation, and potentially attractive returns. Islamic finance appeal has expanded beyond Muslim-majority countries, leading to greater market acceptance and development of compliance financial products worldwide.
My name is Ho Sing Lee. My metric number is 8218247. I will present for cons of investment in Islamic structured product and derivative. First is complexity. It's very difficult for investor to understand the mechanism, risk and basic asset in investment, and also can cause the investor either in profit or loss in their investment. Second is limited liquidity. It's challenging to sell or withdraw from this investment transaction before maturity, which the potential is can attract an investor, and this will also limit their flexibility while investor in investment. Third is higher costs. This include a fee such as legal fee, advisory fee, and other structuring costs they need to pay in structuring process and also need to ensure each investor are following by Sharia compliant when they are investing. Fourth one is regulatory challenge. From these cons, Sharia compliant will use in any deviation to cause product and derivative to become a non-compliant and also will affect the nature of trust from investor. Lastly, is counterparty risk. It depends on agreement with business partner to avoid direct speculation in conventional option or swap. And if fail to perform their obligation, investor will be exposed to additional risk to become their return has been tied directly into their performance in their investment.
Good day, madam. My name is KANDASAMY and my metric number is 8218367. Today, I would like to present risk in investment in Islamic structured products and derivatives. First of all, Sharia compliance risk. A primary risk is that the investment may inadvertently violate Sharia principles, leading to reputational damage or financial penalties for the issuer and investor. Different scholars of Islamic financial institution may have varying interpretation of compliance and standards may evolve over time. Market risk. Islamic structured products be subject to price volatility due to market conditions, impacting the product's returns. Sharia compliant investments avoid traditional derivatives and interest-based hedging, so price movements may be harder to mitigate and the investor could face higher market risk. Liquidity risk. Islamic structured products are less liquid than conventional products, with fewer buyers and sellers. This can make it difficult for investors to exit their positions quickly or without a loss, especially in less mature markets. Some Islamic structured products may restrict early redemption or impose fees limiting flexibility. Credit risk. Islamic products often use contracts which depend on counterparty reliability. If a counterparty defaults, the investor may lose part or all of their investment. Structured products often rely on sukuk or other assets. If these assets issuers default, it can significantly affect return. Operational and legal risk. The complexities of Islamic structured products can increase the risk of operational errors. Islamic finance products can be governed by different legal systems. Disputes over contract terms may lead to lengthy resolution. Last but not least, profit rate risk. Many Islamic financial products use profit rate benchmarks. Fluctuations in these rates can affect the performance and appeal of these products.
A very good morning. I'm SINTHU and my metric number is 8218307. So today I will be talk about the challenges. Firstly, limited product. Prohibition of interest, riba, excessive uncertainty, karar, and speculative trading market limits the range of financial instruments and structures that can be used. Secondly, competition with conventional products. Investors often compare returns with conventional structured products, which may offer higher returns due to fewer restrictions. Thirdly, risk of non-compliance. Any perceived or actual non-compliance with Sharia principle can lead to loss of investor trust and reputational damage. Fourth, market awareness and education. Many potential investors lack understanding of Islamic structured products, which hinders their adoption. Fifth, regulatory and legal barriers. Islamic finance operates across multiple jurisdictions with varying regulatory frameworks, leading to inconsistencies and legal uncertainties. And lastly, cost and operational challenges. Structuring Islamic products often involves complex arrangements such as layering multiple contracts to meet Sharia requirements, which increases cost. Thank you.
I'm BINTI AZNAN, and now I will continue this presentation with opportunity and future. Firstly, the growing demand for Sharia compliant investment. This is clearly due to the growing awareness of ethical finance and the growing demand for Islamic financial products from Muslim majority countries to the global market. This opens opportunity for Islamic structured product and derivative to meet the needs of investors looking for ethical, responsible and sustainable investment. Secondly, innovation in derivative and product with Sharia compliant structure. As a result of a rising demand, financial institutions need to develop more innovative Islamic derivative and structural products to meet investor need for capital protection, growth and hedging solution. Lastly, technological advancement and digital platform. The development of online platform and mobile application can make Islamic structured product and derivative more accessible to investors. Digital tools can provide investors with solutions tailored to Sharia compliant, whether through robo-advisory service or direct investment in structural products.
Assalamualaikum, my name is SITI ATHIRAH number 8182700. So I will continue with the conclusion. The conclusion is Islamic structured product and derivative provide ethical investment option following Sharia principle. They avoid interest, uncertainty and gambling, focusing on fairness and risk sharing. The product have many benefits such as product sharing, effective risk management and growing demand in the global market. However, they also have less challenge. These include being complex to understand, having limited liquidity and needing strict compliance with Sharia rules. Despite this challenge, there is a lot of opportunity for growth. Many people around the world are looking for ethical and sustainable investment. Technology can also help by making this product more accessible through digital platform and mobile apps. Financial institutions can create innovative solutions to meet this demand. By addressing challenges and using new technology, they can make Islamic structured products and derivatives more attractive and available to investment worldwide. So that's all from me and my group mate. Thank you.